Hey guys, today's episode is with Kristin Langenfeld of Goodbye Gear. This is a circular economy startup selling used kids gear. We talk about what Kristin had to do when COVID-19 hit, how she had to lay off 25% of her staff and put fundraising on hold and take pay cuts across the board, and then how she got it all back on track and was able to raise money. We get into startup metrics, the metrics she really needed to learn before getting into discussions with investors. If you like this episode, please hit that subscribe button, leave a nice comment, and then email me at info@foundersuite.com, and I will send you our VC due diligence checklist. This will save you a ton of time and money, and it's all the things you need to prepare before you get into real deep discussions with investors. So hit the subscribe, leave a comment, email me, info@foundersuite.com, and I'll send that to you. For now, enjoy the show.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Kristin Langenfeld coming to us from Denver with Goodbye Gear. What do you guys do? I think it's an interesting business.
Yeah, sure. So we're an online marketplace. We sell quality checked secondhand and open box toddler and kid gear and baby gear. And the way it works is that people across the country can browse online, and we have a massive selection of gear, and then they have it delivered to their doorstep or shipped. And then we are picking up from individual families in both Denver and Dallas and expanding into more locations this year. So the way that works is that we show up with our van and all of the gear that your kids have outgrown, we pick it up and we process it, and our customers just sit back and get paid.
Okay, that was my next question. I was thinking a lot of people would probably just almost give it away for free or almost pay you to get rid of it, but you're letting them actually sell it and getting like a commission. Is it kind of like a commission store? Mm-hmm.
Yeah, exactly. It's like high-tech consignment.
Consignment, yeah. Got it. And if it doesn't sell, do you give it back to the people or do you donate it or something?
Yeah, we donate. We generally sell through over 80% of the inventory we get from sellers. And if it doesn't sell at that point, then we continue to drop the price. And then if it doesn't sell, we run a clearance sale where all the proceeds go to a nonprofit. In Colorado, it's a Children's Hospital Foundation. In Texas, it's also the Children's Health Foundation. So that really clears out a lot of the items. If people do want to pick it up or have it sent back to them, they can. But most people, like you say, if their kids have outgrown it, they're happy to have it out of their house.
Interesting. Why'd you choose, not to go too much into a tangent, why'd you choose the consignment model versus just paying them some, fairly low amount for the stuff and then taking ownership? Is it just better margins or what? Why consignment over buying it directly and reselling it?
Yeah, it's a great question. We've actually experimented a little bit with buying some hot items. I think for us, over the last 4 years, one of the things that we've been able to do is capture a ton of data on what items sell for. And it really does depend on sometimes the time of year, but it's the make, model, and then what's come out since then. And so it ages, and our algorithm that does the pricing is quite advanced. And we've got it pretty dialed down that for items that we have a really good intelligence on, then we can offer to buy them outright. But a lot of times, people sometimes people think their things are worth more than they are. And so we are happy to price it at whatever. We recommend a price, and customers have give them 24 hours to request any changes to their pricing and listing. Most people don't, but if they do and they say, I think that this item that we've never seen before, that's like a European model or something that we don't normally have, we try to list it at that, and sometimes it sells, but generally it just drops in price until we find the right price for it to sell. And so we don't have enough data to say, like, we will pay you $300 for that. Whereas if it's a Bob stroller that's a 2015 that, is in great shape, we know that we can pay X for that, like $150, and that would be our margin. But
yeah, interesting.
Yeah, I mean, to answer your question though, I mean, we originally started with the consignment model because that's what our customers wanted. So
I have two kids. They're now a little beyond they're 7 and 10. So kind of outside your focus, I think. But like, I remember just how ridiculous it was. You'd buy the kids stuff, toys, they'd play with it for 3 months and then it's done. And then I think we put a lot of stuff on Craigslist, left stuff on the curb with a free sign on it. It's kind of a ridiculous, inefficient industry, isn't it? The whole kid gear stuff. And like, I remember a friend says, like, why aren't we renting, almost like a rent to own model where you're renting a stroller for a few months? I mean, this is, I guess, kind of a solution to a really inefficient market, right? Basically.
And the stuff that's built for babies and kids is so well built. It has to be, because you don't want a baby to get hurt.
Yeah.
Someone once said, this stuff is built for an apocalypse, yet you use it for 3 months.
Yeah.
And it has a lot of life left in it. And that's, a big part of why we started this business is wasteful. And then you let it, and some people let it sit in their garages or basements for 20, 30 years until they're waiting for grandchildren. It's like, well, by that time, there's been 30 other versions of it and it's probably not even safe. So like, it's better to try to get it out and resell it and enable that circular economy that we can reuse all of the crap that we already have on Earth and not have to build new plastic and pump more stuff out that we have enough here right now.
Yeah, absolutely. Some things you can't resell, like car seats, right? I mean, some things you can't resell. What happens with all the car seats after using it? Just landfill? Or
I have to have a whole nother hour conversation to go through my rant about car seats, but we sell open box car seats. We cannot sell used car seats today. The reason being, you don't know if a car seat has ever been in an accident. And if it's been in an accident, then the integrity of the car seat is compromised and it's not safe to have a baby in that. Yeah. So we don't have a way to know whether it's been an accident, so we don't resell car seats that are used. Open box are strollers that are like display models or returns that customers have not used, and that we can resell those. Unfortunately, today, this is across the board. Used car seats are not supposed to be sold. You can buy them from friends that will say, we know this hasn't been an accident. We work with nonprofits in our markets that we're in today who need car seats, and for a lot of their agencies and families in need, a car seat is better than no car seat. So for them, they accept the car seat. So we direct all of our car seats that are used to them.
Interesting. What was one last question, then let's talk about fundraising. What was your motivation for starting this? What were you doing before? Were you a mom and you're like, this is ridiculous, all this stuff I've got?
Pretty much it. No, my background, I've actually worked in telecom and mobile authentication and identity for my career. And I was one of the first employees at a startup called Payphone. And I ran product for them. So I've been in the technology space for a while. And then I had my first child, and my co-founder, Jess, and I were, had both had young kids and we're both struggling with similar problems. She was actually trying to figure out what to do with all the stuff that her kids had outgrown. They're a little bit older than my kids. And I was trying to find a safe and convenient way to buy some secondhand stuff for my kids. Cause I was just like, we got so much stuff given to us, but then we still needed more things. And we actually had a terrible experience trying to buy a used stroller from it was actually a mom's group in Denver here. And it was like a trusted Facebook group. And I wasted my whole day, going back and forth with all these different people, then got one and arranged a time to go meet her, and drove across town to go with my 3-month-old daughter in hand, and showed up at her door, and it smelled like weed, big dogs, and the tires were flat, and I'm trying to pay her cat. I'm like, this is the worst experience. I'm like, why are we doing this? So you get everything delivered to your door. Our lives have, there's so much convenience, and then yet you become a mom and all of a sudden you try to buy something used, and the stuff like we talked about, it's great stuff. You should be able to use it again. And so I was just frustrated with the time suck and the inconvenience of it. So there's got to be a better way. And and started digging into it, and there really was nothing that I could find. And so Jess and I were actually on a mountain biking trip, and over a few glasses of wine, we said, let's try to solve this. And Monday morning, we called each other and said, "Were you serious? Were you serious? Yes, yes. Okay, let's do this." And we started the company that Monday.
Yeah, cool. Very good. All right. How much have you guys raised and how many rounds?
We've raised 3 rounds, just under 9 million. Our first round was 750. It was a pre-seed, friends and family. And then we raised a seed round of 2 million in 2018. And then we raised our Series A of 6 million in September, or I guess we announced it in October 2020.
Excellent. And if I'm looking at something correctly, you went through Boomtown, the Accelerator. Is that correct?
Right. Yeah. That was we'd started the company. That Monday was September 2016 that we started the company, and we went through Boomtown at the beginning of 2017. It was a phenomenal experience.
Was that a traditional accelerator where you're in there for a few months, kind of grooming your pitch and demo day at the end, all that good stuff?
Yeah, but it was really helpful for us because to be honest, we started the company as a technology company. We had no intention of touching every product. And we, through the course of Boomtown, did a ton of user interviews, and we were trying, we had actually developed a mobile app, and we had people being able to post their items, and we would pick it up and we would deliver it to the buyer. And so we were facilitating most of what we thought was the problem. And then what we learned when we showed up people's houses, they're like, "Oh, I have so much more stuff." And then Jess one day was like, "Well, I'll just take it for you and post it for you." And she was like, "Oh my God, okay." And then she told her friend who told her friend. And all of a sudden we did 20 of these like white glove pickups in a month, and we didn't even have it on our website or and so that was like all through Boomtown, and they encouraged us and helped us build our financial model to see if this would be a viable business to have a managed marketplace where we were touching every piece of inventory.
Yeah, that is a big decision though, isn't it? Whether to be totally virtual and just the market, or to touch inventory. I mean, I guess you are. So you have to deal with warehouses and storing all this stuff and cleaning it and all that good stuff, more or less. Interesting. Maybe talk about the fundraising journey. How did you identify investors that would be interested, or did you look at marketplace investors, or I don't think baby or kid. I don't think kid is a category for investors, is it?
Well, so if I go back to our seed round, so our friends and family, the first round was, it's like a pre-seed round, but it was friends and family, and then one institutional investor joined that round, and they were local here. But in our seed round, it actually was a company that invests in baby and kid care. They invest in companies that solve parenting problems.
Who's that?
It's called BCP, Be Curious Partners.
Okay.
Small. The main LP is the owner of Kids 2, which is a conglomerate of baby gear brands. So they own Baby Einstein, Bright Stars, Ingenuity, and a few others. So we came across them, and I said they would be perfect, because one of the things that we have been doing, and it's become a bigger part of our business, is actually working with some of the biggest retailers in the country to refurbish and resell their returned and open box display models, overstock, etc. So we knew there was a huge problem in the returns industry, and this gear being essentially destroyed for the most part.
Yeah.
Having that partner that knew what they were doing in the retail space and in the baby and kid care space was super important. So we targeted them. I mean, we talked to a lot of investors, but we kept coming back to them but didn't have a connection. And so Kirk Holland, who is our board member, who's an incredible man, and I just kept asking him, like, "You sure you don't, like, I see that you have a third connection or whatever on LinkedIn." And so he finally found someone that he'd gone to business school that knew somebody. So it was like this random connection to get the intro, which was kind of silly to. So we got the intro to them and really hit it off. And they're based in Atlanta, and so flew out there and met with the whole team, and they led the round, and it was it's been great.
How'd you identify them? That's a pretty niche, obviously niche venture space. How'd you hear of them? How'd you find them? Yeah.
They asked me that, and I was like, I'm pretty sure it was from we have a part-time marketing person who was working with us and is still with us, and she had come across them, and I think I'll have to ask her how she came across them. So I think they invested in Motherly, and I think that was how we found out about them, or how she found out about them.
Okay. And then maybe talk about filling out the rest of the round. I see Access Venture Partners. Is there a guy named Jay Campion still there? Is he at Access now?
I don't think so. It's Kirk Holland, they actually invested in our pre-seed, or like the first round we did. And so they participated in our second round and our third round as well. They've been an incredible partner. Very lucky to have Kirk as our board member and investor.
So Be Curious is Atlanta, the rest in Colorado, or maybe, any commentary on like raising capital from Colorado investors, advice, tips, insights, anything?
I think that in any startup you get a lot of, and it's always been whenever I talk to other founders, I'm like, just be prepared. Like, if my husband's in sales and I've never done sales, so he knows this and taught me, like, you got to have your pipeline. You got to expect, like, you're going to get a lot of no's. Don't take it personally. So we got a lot of no's. Everyone thought we were crazy. A lot of people still think we're crazy, in business. And so Colorado investors are definitely a little bit, I don't want to say more down to earth, but in Silicon Valley, like, everybody just wants you to sell like this. You're going to be not even a unicorn anymore. It's what do they call it? A decacorn.
Yeah.
You got to sell like you're going to be the next Uber, and you got to have this big vision. And where I hear it's, a good business is, if you're doing $100 million in revenue, that's a really, really great business. And that is something that you can talk about becoming, and they will be interested. Whereas I think they're swinging for the fences in Silicon Valley, and here they'll make other bets. So I think, and that's a generalization for sure, but I definitely found that, and didn't have a ton of success getting Silicon Valley investors, except for Relay Ventures, who they're based in Silicon Valley and Canada. But they were actually an investor in Payphone, the company I was at before, and
so they knew you, basically. Mm-hmm. Interesting, cool. And
pre-seed round with a very small check, and they're like a much later stage investor. So it's been so helpful. We get to go to all we're not now with COVID, no one's going anywhere, but before that we went to their portfolio summit and got to meet some amazing people, and brought on an executive from eBay to our advisor that we met at one of their events, and just had some amazing mentors.
Talk about that. What is that? What's a portfolio summit, and what happens there? It sounds cool. I don't think anyone's ever talked about anything like that on this show, so I'd love to hear the inside.
I wish that we didn't have COVID. It was so amazing. It's different for, I think, every investor, but at least for Relay, what they do is they bring in different speakers and they have different sessions, but then they have dinners and wine tasting and other sorts of things where you can get to meet other founders, and then they bring in all their LPs and then other investors that they co-invest with too. So you meet other potential investors for other rounds. So it's a really, for us, it was just an incredible experience. And they even have like boot camp in the morning. So at 6 a.m. they have a guy running a boot camp, and like the people I did that, and the people that you meet on that, you have a whole different appreciation for when you're like running around and trying to do this exercise.
Like a literal boot camp, not a hacking sales.
No.
Like a real boot camp where you're
run up the hill and do some burpees and that sort of stuff. So
good for you. I might skip that one. And then this Series A. So I guess, maybe if you can share kind of how did you know it was time to raise Series A, and what did the business traction or metrics or whatever you can share kind of look like when you knew you could go out and raise a Series A? Because, it's COVID time. So, yeah.
It was an interesting year, for sure. So we had our board meeting in March, and we had secured a couple really big partnerships, and we had just launched Dallas, and it was exceeding expectations, and we had great revenue growth month over month. So we were very confident we were in a good position, had the fundraising deck ready to go, and had our pipeline of people we were going to reach out to. And then the next week, COVID was like the shelter in place. And this is kind of a long story, but I mean, our business, a third of our sales were in person. So people shopping our warehouses. Mm-hmm. And, and it's a physical, like people are working in the warehouse, processing inventory. So when COVID hit and we had to obviously shut down all in-person shopping and no one could come into the warehouse, we didn't know what the future would hold, as no one did. And we went into super defense mode. We put fundraising on hold. We actually laid off a quarter of our staff. We cut all of our contractors and expenses. We decreased our OpEx by over 40%, extended our runway so that we didn't have to fundraise. I mean, we had enough runway. But this got us into, mid 2020. And so we felt more confident, and we just put fundraising on hold and had enough cash to sort of so we weren't fundraising, but I had met a partner at Revolution Ventures the year before, and he reached out and just said, "Hey, how are you guys doing?" And we jumped on a call a couple of days later, and just I'd hit it off when I'd met him in person, and then we hit it off on the phone, and was just telling him about our what we've been doing and just how blown away we were with our team. I mean, our entire team, everyone took pay cuts. We all stepped up and we threw out our OKRs and our goals and just said, let's do more with less. And the entire team stepped up, and I'm just so proud of the people that we have around the table here. And I almost got I'm not an emotional person, but I got teared up a little bit just talking about it. And so we just had this heart to heart moment and stayed in contact. And so, before we decided to start fundraising again, we had already done 5 or 6 meetings with him. And so he was pretty versed on where we were as a business. And then in July, we said, our numbers are through the roof and we're doing really well. And we've hired everybody back, and,
wow.
we're going to start fundraising. And then we started doing more meetings with them. And so it had a head start with them. And so we got, pretty far with some other investors, but they got a term sheet over that we accepted. And we didn't, they filled most of the round, and then our existing investors filled the rest. So it was,
and that's Revolution that led that. And that's the, what do they call themselves? Not the anti-coasts or the flyover. I forget what they call themselves. It's basically everywhere except California and East Coast, right? Basically.
They have 3 different funds, and the Rise of the Rest is probably what you're thinking of. That's their seed fund. And then they have Revolution, which is their growth, Series A fund. And then they have I guess that's a growth fund. Sorry. So then they have a Revolution Growth Fund. So they have 3 stages, but yeah, that's what they do, is the rest, they call it.
The rest. Gotcha. Interesting. Cool. Well, congratulations on that. Yeah. So they reached out to you, kind of, you would put fundraising on hold, but then, you were, I guess, getting a few inbound pings from time to time, people you had talked to in the past. That's what sort of kicked off that round.
Yes. Yeah. And I think he was just more reaching out to see how we were doing. We were okay. And, and I got a lot of that. It was a really crazy time. So yeah, we had a lot of people that we had talked to that were just like, hey, how you guys doing? And sending us some advice and articles and, just helpful things that we can do.
Interesting. I was thinking about your business with COVID. I mean, people still have kids and they still need toys and strollers, so that doesn't go away even if there's a virus. But I guess that, like you're saying, the in-person shopping definitely changes. Any other like big macro changes with COVID that kind of happen? Or
we made some other changes to the business. I mean, I think the one thing, especially early on, we didn't know how it was really spread, and so we used to process inventory very quickly. Like we'd get it in, we'd process it and get it up on the website. Then we left a holding. We said I think 5 to 7 days that we wouldn't touch. Like we would come in and we would leave it to sort of let the virus sit. So we extended our timeline with that. And then we used to have all our wing moms, which was like our processors, would bring their children, or if they wanted to, they could bring their children. And we had a daycare or a playroom that was dedicated to children, and so that was always really fun and part of our culture. But that obviously like didn't work with COVID, and then since then, we've just not been able to have children. So we've evolved to, we still have wing moms and people that have children, but the children are not in our warehouse anymore. So it's been another big change.
Did anything change in your fundraising approach, like COVID versus pre-COVID earlier rounds? Any?
Let's go. It was awesome.
Was that saying?
That I didn't have to travel to San Francisco. It was awesome.
Right. Yes.
It was actually really nice because you think of how much time you waste, and then it's like, oh, I'm going to be out in San Francisco next week, and then okay on Tuesday, and then you do a flight and you have like 3 meetings, and 2 of them say, oh, actually, could you do tomorrow? And you're like, oh no, I can't. And so, I like that part. I didn't have to travel for those meetings, and it definitely made it harder. And there was more Zoom meetings that were required, but you didn't have to get on a plane and travel. So that's good.
Yeah, definitely more efficient. You lose something when it's Zoom, right? Where just that personal body language vibe, I don't know what it is that you get from the face-to-face, but it's definitely more efficient. You can do a lot more Zoom meetings a day than face-to-face meetings, no doubt about that. Great. Well, any other tips or advice you'd give either people building marketplace businesses or kid-focused businesses about fundraising, or any advice you would give your younger self if you were doing this all over again?
Well, maybe I'll start with that and then I'll do the fundraising. I think
sure.
the piece that I didn't understand, and I wish that I would have understood better when starting the company, is how important, it sounds so corny, but like your core values and culture are. And ultimately your company is the people that are around the table and that work here. And we made a couple of mistakes very, very, very early on. So we were lucky that it was early on and we could recover from it quickly. But they were just the wrong people, very smart, experienced, etc., but just didn't jive with what our core values were. And, nobody has an ego. And so we don't hire people that have a big ego, or, just that, because it really does matter. And when people love their job and coming to work, then they are very productive and efficient. It makes you want to go to work. So I think that's one thing that I just thought was fluffy stuff. I'm like, no, we don't need to worry about that. And Jess, my co-founder, who's incredible, is like, no, we got to write this down. Like, who are we? What do we care about? And that is, I'm lucky that I had Jess with us and that we made some mistakes and that really forced us to not make them again and learn from them. Yeah. And then in terms of pitching or like investing, I come back to what I said before, like, got to get thick skin. Don't take it personally, because everyone's going to think you're crazy. So just assume that everyone's going to take you crazy or think you're crazy. And the ghosting is probably my pet peeve. Like, if I am an investor, I'm just like, just say no, don't great meeting and then ghost them. It's so rude and it's not helpful and super frustrating. So that's like my pet peeve, is the ghosting. And for some reason, it happens more with female investors than with male investors. Maybe it's just the luck of what I've had, but it's
interesting. Huh. I don't know why that would be. You'd almost think females would be a little more, because there's so few female investors, you'd think they'd be more like collegial or sort of underdog. We're in this, but that's interesting that was their experience.
Yeah, it's weird, but yeah, and I think the one thing that has served us well is, I mean, ultimately, like as founders, you are the biggest investor in your company. I mean, it's your time, the opportunity cost. You could be doing something else, and the commitment, and the toll on your family, and the rest of your life. Like it's a huge commitment. So you need to make sure that it is a big enough opportunity, that B, customers actually want it and care about it, and C, that it's a viable business, like that there is a way that you're going to make money and become profitable one day. So like those three things, that you convince yourself of that, and then it makes it easier to sell it to someone else because you truly believe it. And maybe I'm just not good at bullshitting. Or sorry, I don't know if I can swear.
That's all right.
I'm not making stuff up. And so for me, that has always served us well, is that we've been very confident in, like, we are the customer and customers love this. And we're solving a real problem for families and making their lives easier. And this is a huge, like, a lot of people think, oh, it's just baby and kid gear, but it's a massive vertical. And there's other verticals like Goat or StockX or ThreadUp or The RealReal that are all billion-dollar businesses in specific verticals doing a managed marketplace. So now we have like other people proven that it is a big business. And then the third is like knowing your own numbers and proving to yourself that, like, that you're making money on every transaction. Like we're way over break even on the very first transaction that a customer interacts with us. And that's been important for us to measure and to make sure of throughout the time. And I have a friend of mine who has an awesome business and always has like struggles to fundraise. And she's always like, oh, I don't know the numbers. I don't like the financial, like, what do I need to make the financial statement say? And like projections say. And I'm like, well, you need to like know that and and like make sure that you're confident on how you're going to get there. I mean, the financial model evolves all the time as you get more learnings and you get more data. You need to understand it and be able to defend how you're saying you're going to make $100 million in 2 years, like that, or whatever it is. So knowing your numbers, I think, is really important, and has served us well, is those three things, and being able to be confident about them.
That's a good point. Because I think we haven't really touched on that much on this show of, what advice would you give in terms of knowing your numbers? What are the expectations of investors, say at the seed round, maybe, of what you need to know? Obviously your current, maybe I'll let you answer that. Like, what would you advise your friend who's been struggling, what metrics she really needs to know for a given round?
Yeah. And this is like pop and answer, depends on your business, but for us, like the things that matter is our, like, your top line revenue, the number of customers we have. For us, our flywheel is very important to the number of buyers that become sellers in a marketplace. Like the cost of acquisition is super important. So for us, understanding our cost of acquisition and making that defendable or like predictable, and being able to show scale tests. And so really like having that cost of acquisition, your CAC and your LTV, and being able to defend where those are. So like that has been one thing, and that together with like your unit economics. So knowing what all your costs are and what your margin is. And so that you can clearly say, like, this is what it costs us to get a customer. This is how much we make from a transaction. And here's all of the inputs. And here's the ones that we have a lot of data behind. And here's the ones that we don't have a lot of data behind. But here's why we think that this is a reasonable or conservative estimate of where we are. So for us, it was, it continues to be like the number of buyers become sellers, and that flywheel of customers and our customer acquisition, and then just growth. And what are the drivers of that growth, and how do we, turn levers to be able to increase that or decrease that?
That's interesting. Just one more on that. The flywheel, that's interesting. All the other stuff, I'm pretty familiar with, cost of acquisition, LTV and stuff like that. But the flywheel, your metric there is what % of people who buy something on the site go on a year later, 6 months later, whatever, and sell something, right? Is that sort of the ratio? Is it simply a percentage or something?
Yes, we monitor that very closely. It's about 5.5 months that a buyer becomes a seller in our data. And we're, it's also, so that's one of our flywheels, and a very, very important one, as sellers are harder to acquire, as it's really a point in time, versus buyers where it's real, there's an intent, like I'm looking for a stroller. But the other flywheel is just like the buyers becoming buyers again and having that repeat cycle, and then the referrals of telling your friends. So there's multiple like loops, if you will, of our customer behavior. But the real secret market dynamic that we have is that our buyers become sellers. And it's one of the things about, Etsy, is how it really grew fast, is they had that overlap of their buyers and sellers.
That's interesting. And how did you identify? Because there are, especially in the early days with the startup, there are so many metrics you can analyze. It's sometimes hard to know what ones to focus on. How'd you know that metric, buyers become sellers, flywheel, was one to really hone in on? Like, yeah, how'd you identify that one?
Yeah, I mean, I think for us, we have always struggled with supply as being, like every marketplace has it's the chicken and the egg, and how do you have to get one side going before the other, and demand has not been our problem. And people find us and buy it and get addicted to buying more on our site, but selling, because there's a point in time. Are we done having children?
Yeah.
Many of my friends, there's all sorts of different factors that it's been our biggest challenge. And what we found early on was that buyers are much cheaper to acquire than sellers. And if we can make our buyers become sellers, then that makes the model super successful. So it was like sort of the problem, and then seeing like a twinkle of a solution, and then really doubling down on that and building that into the model, and seeing the sensitivity around how that transition to buyer sellers really is a game changer for our marketplace.
But then you also have to adjust for some churn, because as their kids age, right, they sort of eventually churn out both on the buyer and seller side, I would imagine, right? So do you have a metric for like expected churn or something like that? I don't know.
Sure. I mean, and it is, when we talk to some investors, they're like, well, that's a really limited time. It's not like, with Uber, you're going to take lifts for the rest of your life. For a long time.
Yeah.
But for us, it is a specific window of time that you have children, but it's a long window. I mean, 7 is like, we don't have a lot for 7-year-olds. It's really 5 and under right now. And the real sweet spot is getting someone when they're pregnant to start buying stuff all the way through. And, but if you have multiple children, then it becomes like a 5 to 7 year cycle that they are a customer, but they're a super sticky customer that is buying and selling from us multiple times a quarter. And, so, and it's not like transactions of a couple dollars where, average seller makes almost $400. So it's, condensed period, if you will, but there definitely is an end time.
Yeah. Interesting. Very good. All right. I won't keep you too much. You've got a marketplace to build and manage. Any last tips, any last words of advice for folks? And if people want to learn more, simply once you give the plug. Yep.
Yeah, no, I think my only advice to people is like, if you have a problem and you think it needs to be solved, do it, and surround yourself with advisors and people around that can help you get there. And if I can be helpful, I can be found. Our website is goodbyegear.com. I'm on Twitter. I think it's K Langenfeld. Yeah, Langenfeld on Twitter, and I'm not super active on there, but I can be found. And it's goodbyegear.com, and I'm just Kristin at goodbyegear.com.
And it's just for anyone, it's goodbye, BUY gear.
Yes.
Goodbyegear.com.
Goodbye.
Cool stuff. How long you been around? I wonder if my wife did all the purchasing. I wonder if she ever stumbled across you guys. I sure wish we had, because we spent so much money on this stuff.
It was 2016, but we really started shipping nationwide about this time last year. So
Okay.
Yeah, about a year ago may have been too late for your kiddo.
I think so, a little bit, yeah. But man, it's a great idea. For anyone who's dropped thousands of dollars on some of these strollers, and then I remember there's even a business here in San Francisco in the Upper Haight that was purely, all they did is stroller cleaning. A couple hundred, like $100 or something, taking your stroller, and they steam clean it and get all the graham crackers out of the cracks, right? Like there's a whole business around just that. So yeah, cool. All right. Well, thank you very much. Appreciate it. Good luck. And we'll catch you after your next round.
All right, sounds good. Thank you.